Hello everybody, welcome to your Friday edition, the final day of the week for the TraderMerlin show and for most of our trading, unless you're trading cryptocurrencies over the weekend. A cheers to everybody. This is, what am I drinking today? Surfside. I think it's Surfside Distillery out here in Huntington Beach. Figured I'd go local today since I'm going to be spending pretty much all weekend at the beach, and I hope you guys are doing something fun as well. So cheers to everybody. All right. Good one. As you guys can see by the graphic I chose for today, different whiskey in my hand. That's Blanton's in that hand, but I decided to do something kind of fun. It was like a little bit of a roller coaster because, boy, this week was just a wild one with big swings, anticipation. A lot of people, I think, still scrambling to figure out what the hell is going on with regards to our markets. So I thought that was a good way to start with that graphic. Now, let's just start things off and work our way up from the bottom to the top with regards to performance for today. Here is the Russell 2000, just to start things off. Now, a couple different pieces of interest for me. Really, the S&P was the one that had the levels that I was focusing on the most, but if you notice what happened here, we rallied back up right on that Wednesday announcement, which we kind of anticipated that, right? We were outlining saying, where would this thing be an extreme for price to move to? We rallied right up that supply zone, and now we ripped back down to actually below some important levels. And if you notice where we closed at, for me, it's pretty important how deeply we closed below this 1881 line. The further we get below that, the more likely it's going to keep on pulling things down. So Russell is down 1.94% today. Not very good. And for Tom, it's officially outside that yellow box. We're gonna have to delete the box, Tom. No more box. NASDAQ, another tech crunch today, closing at its lowest level in over a year for the NASDAQ composite. You can, or see, NASDAQ 100, excuse me. You can see that closed down here today on the NASDAQ 100 all the way down to a low price of 12,662. And for me, that line in the sand was really 1293.4. So this is pretty important. We've now broken below it. Some would argue that you're hitting some demand zones that go back to March of 2021. But I think ultimately we'll end up seeing this. I'm just going to move this line down. Let's get rid of this line here. Move it down to right there. I think as soon as you get to around 12,250, that's our next target, which we'll probably hit early part of next week if this momentum continues to move to the south side for the NASDAQ. But all in all, huge choppy. I mean, look at the last 5 candles. You had Monday was a nice green one off of the low of that demand zone. Tuesday was up a little bit. Wednesday had that huge big gangbuster move to the upside, but it came right into overhead supply and then spent the next 2 days doing pretty much nothing but drifting down. So ugly day out there for the NASDAQ, and that's not the worst of it all. Here's your S&P 500. I left the lines on. You guys might remember we drew these on the show, I believe it was Monday or Tuesday. I think it was Tuesday's show when someone asked, how do you trade, or, what things you're looking for to trade with regards to an FOMC rate statement or announcement. And I just said, look, I'm looking for extremes. I'm looking for, way outside the money and hopefully getting far outside of price where I'm not going to get hit, and I'll capitalize on those extremes. And I don't know if anybody followed this today, or this week, but we came directly, those 2 blue lines, we drew those on Tuesday. Right, and those are kind of our extreme points because at that moment we had a line. Let me draw another line here for you. When we drew those, it was right about here. Change that color to, I don't know, red. There we go. And hit enter. Perfect. So the red line here is where we mapped out those overhead supply and demand zones and hit them absolutely perfectly today. I closed out of my QID position just because I didn't want to carry it over the weekend. It felt like just a little more uncertainty than I want to deal with. So I closed out some of my short position today. It's a little bit still on the table for, let's see what happens on next week. But bottom line, I thought it was great how this reacted to those levels that almost most people in here go, no, I don't think we're going to get to these levels. And not only did we hit the upper one, but we came screaming down and hit the lower one today too. So nothing like a 150-point swing, a 250-point swing in the S&P just in 2 days. Pretty crazy move. All right, let's talk about bloodbaths and look at cryptocurrencies. The only saving grace here for Bitcoin and anybody who's loving Bitcoin is this tiny, tiny little hammer you have here today. Now, granted, it is a red candle, which doesn't, it's not the end of the world, but it is a hammer formation on today's trading activity. So if you're looking for a breakout, you're going to go right above the high of today's candle, which for Bitcoin, these are the futures. The high is going to be 36,595. So we get above that potential buy point to capture some move back to the upside. But let's be honest, this trend for the past couple of weeks has been decisively negative going back into late March. So to me, it'll probably, if it does bounce, it'll rally back up to some supply here and probably continue that trend to the south side. Hate to say it. Yes, these charts are beautiful and just crazy swings, right, Big Eb? I mean, awesome swings. Here's your Dow Jones Industrial Average, which did a very similar thing. You know, if we were to map out, you know, it came right back into these highs that you saw from last week. And as far as the lows go, we literally hit the low that we saw from Monday. So nice range as well, just hitting the tops and bottoms, bouncing back and forth. Love it. Moving on to commodities, here's your gold for the day, which actually had a fairly narrow range, not a lot going on. It was ultimately a green candle for gold with the little small topping and bottoming tail, but no real direction here. All I can perceive from this is I'm focusing on that trend from March, which has been drifting lower and lower. So my anticipation or expectation is that over the next week or so, we will probably see gold continue drifting down, and that may have a lot to do with that strong dollar. And finally, crude oil. Crude oil breaking out of this tiny little cup and handle formation. I was talking about that one the other day where you have this cup, you have a little bit of a handle, and now the breakout. So the expectation for most people is on that breakout, how do you measure the distance? It's generally done with what's called a measuring object, which is from the bottom to what you would call your neckline, which should be right around there. So how do you measure that out? It's going to be, basically, it's forecasting that crude oil would get back up to your 124 mark based off this breakout. Now, you know, I have always had challenges with measuring objects. I think they're extremely subjective, but at least it does give us some expectation about where things may be headed and what other people are thinking and looking at. Margaret says, is there any one cryptocurrency that is going against the trend? Yes, there's a couple of them out there, actually. So if we look at the equity markets, here's your longer term picture. You've got lower lows, lower highs. I think a downtrend is intact right now. We'll see how it follows through next week. But if you look at something like, let me go in alphabetical here. Obviously, Bitcoin is drifting lower with the market, so that's normal. One that is different would be something like Luna. Right, so Luna, even though over the past couple weeks it's been lower, it's making higher lows still. So that's definitely broke the trend. And I guess you could argue that something like Tron today is breaking out and looking real positive. Tron, you know, obviously there's tons of news with regards to Tron and their stablecoin and getting, you know, billions of dollars hopefully flooding into their projects because of their new stablecoin, which is USDD. But yes, there's always something that's going to move in the opposite direction. But for the most part, most of these cryptos have all followed suit. They're all pretty much trending down. I'll just quickly run through some of them. You know, here's your EOS, which looks just like it's dead. Songbird, you've got Digibyte, you've got OX. I mean, they're all really weak. Even Ripple. Just a few are looking strong. This is Monero, which is a privacy coin. Now, granted, you see a sharp move down in the past 2 weeks, but before that, for the month of March, April, we just strong like bull, almost 100% gain in 2 months. So that one definitely is going against the trend. So there you go, Margaret. There's a little bit of cryptocurrency that's looking a little bit different than the others. Now, let's talk about some of the economic data because I think more and more attention is going to be put on this economic data going forward. Certainly the Fed made it a point on Wednesday to specifically hammer at jobs report, saying employment is looking great. Inflation, you know, is a little bit too high, but we'll keep that in control. And he did talk about GDP and economic growth slowing a little bit, and of course citing Russia, this, that, and the other thing. For those of you, if you look out to next week's announcements on, I believe it's Wednesday and Thursday, you have CPI and PPI numbers coming out. If you look at the forecast, they're expecting massive reductions in inflation next week. I have a feeling they've moved that bar down too far. So for example, the previous month for consumer price index was 1.4. They're expecting it to drop to 0.2. Or sorry, it was 1.2. Now they're expecting it to drop to 0.2. I don't see anything that really would have caused that big of a sell-off there. So for me, I think that they've set that bar too low, and they'll come up with a higher number, and that could be further catalyst for more downside move tomorrow. But we'll look at that next week. Here is some of the economic data that came out today, which is noteworthy. You notice here the unemployment rate. They expected it to drop from 3.6 to 3.5. Well, it came in line with 3.6, so didn't drop like they anticipated. You had more non-farm employment change than expected, so that was positive. So non-farm employment change is good. The unemployment number here, not good because it actually rallied up a little bit here, so just a smidge. And then most of the other stuff wasn't that interesting. If you look at Jerome Powell's statements that he made at the press conference after the announcement on Wednesday, he made a point multiple times. 5 or 6 times he said people are making more money than they have in a very long period of time. Well, if you notice here, average hourly earnings dropped much worse than expectations. So they're expecting to drop by 0.1%. I know, it doesn't seem like much, but it's still negative. Dropped from 0.5 to 0.3. So you're seeing a contraction in average hourly earnings. Granted, it's still increasing, but nowhere near at the pace that it has for the past couple of months. So those are some of the major pieces that I saw moving our markets today. With regards to some of the foreign stuff, really wasn't that big of a deal. You notice Italy up here, which isn't a juggernaut by any means, but notice Italy went from a 0.7% gain in retail sales to a negative 0.5% loss or contraction in it. So that was interesting as well, especially when you look over at some of the currencies, which we'll look at today. And you know what? Why don't we just look at the currencies now? So here is your euro on the dollar. Sorry, euro dollar currency, not futures, euro dollar. Aggressive trend, we know that because the US dollar has been very strong. This means the euro is losing more of its purchasing power. I'm going to take forecast out here. Unfortunately, I don't have time to do the whole survey for everyone, but you can see down at the bottom of the screen, I've got parity. Right, so there's your parity line, which basically means what happens when we get to 1. Let's do some forecasts here for fun. Type into the chat, when do you think that the euro and the US dollar are going to reach parity? We're at 105 right now. Now, just to put it into perspective, this is a daily. We were at 110 back on April 4th. And here we are, May 6th. So pretty much in 1 month, we've gone from 110 to 105. So in theory, if this momentum keeps up, you could see us at 1.0 in another month. But I'm curious to see what you guys think, or are we going to get there? Some of you may think that we do not get a more sell-off in the euro, but I think you're going to see this continue to drift down, which is great because I'm anticipating going over to Europe here soon, which means I can buy a lot more. Markets is end of May. All right, well, that would it's certainly possible, right? Especially the way it's trending. If you say May, though, I mean, Gallo says 2 weeks. All right, I'm gonna scroll back after the show and write all these ones down just for fun. I have all the S&P forecasts that we did on the year, and I think we had silver on there as well. June 1st, we will get there. Yeah, I'm pretty sure that we will get there. It just, I mean, come on, how do you argue this trend that's going on? The only positive piece was this trend line that was moving up. But we broke that, so I have a feeling you're going to challenge these lows that go back to December of 2016, and that's at let's call it 1.4. After that, I got to go out to a weekly or a monthly to see the next levels. Let me just pop that one on there. And there you see parity pretty much at this area where it had a rally at base and a rally out. So I think we'll get there. Cool. I see August, June. Yeah, I think I'm not going to go aggressive and say end of May. I think that might be a little too strong, but if the Fed starts unwinding its balance sheet and removing that cash from money supply, yeah, definitely. I think Big Eb, you're probably spot on. It's not going to be a early July type of thing, but I'm pretty sure we will get there at some point. All right. So as I always mention, if you have questions, you can put them down below the YouTube video. I'm going to get to about 4 of those right now. Make sure I stay under an hour show today because I'm going to go to the beach. But I'm going to read this question from Michael because I think it's very interesting. And it's important that when we look at actions from somebody like Jerome Powell, that you set the context of his actions at this point in time were because of A, B, and C. But now A, B, and C may have changed. I'm looking at X, Y, and Z. What the hell am I talking about? Here's the question. Michael says, back in 2018, Jerome Powell reversed his course of rate increases by putting it on pause when the market started to show weakness. Do you think he will repeat it? If not, what do you think is the difference this time? Would be curious to hear your thoughts. Great question, Michael. I really like that question. And the main thing is, go back to 2018, markets are doing well. The economy was back on track. We were seeing economic data that was very bullish. We had low unemployment rates. We had GDP growth. We had no inflation, or at least low inflation at that point. So what he was trying to do was unwind their balance sheet, raise rates to get them back to a normal level because you can't keep those rates that low for that long, right? It's a dangerous thing to do, as we're finding out right now. So Jerome Powell was raising those rates, right? I think, let me see if I can bring up the rate list for you. Bear with me 2 seconds as I get this. Effective Fed funds rate. So, oh, great. Right as I want to go, the Bank of New York is under maintenance, and we can't see the Fed funds rate. Let's see. I'll find it from St. Louis Fed. Yeah, St. Louis is up. New York, taking a break. Okay, so here is going back into, let's say, as you mentioned, 2018, right? So we were raising. You can see those rates being lifted, got to about 2.5%, right? Just about 2.5%. Then things started to slow down. So, hey, let's help the economy out a little bit. At this point right here where my cursor is, in October and November of 2019, we didn't really have much of a conversation about COVID. It was more, slight economic contraction. Let's lower rates just a little bit, right? Now we have a very different situation because when we looked at 2018 and 19, inflation wasn't an issue. So you ask what's different now? He backpedaled because economy was slowing down and he needed to act as a catalyst. Then COVID hit. Boom. We have in gray here, according to the Fed, we had a recession. There it is, right there. Now we're stuck, have been stuck at zero, and the Fed's backed themselves in the corner because inflation is the major enemy right now, not necessarily economic growth. Super high inflation will choke economic growth in a big way. So I do not believe that Jerome will reverse his course of action. I do not believe that the Fed is going to stop raising rates simply because, we don't want to worry about, we don't hurt economic growth. At this point, they have to stop inflation. Again, it goes back to people buying goods and services. We are a consumption economy. Now, many of us who watch this show probably are doing okay financially. I'm speaking in generalizations here, but most of us are probably doing okay financially and not living paycheck to paycheck. However, I'm sure you all know somebody who is living paycheck to paycheck. And if you look at the cost of goods and services, whether it's just fuel prices, last year I was looking at $3 per gallon. Now I'm looking at $6. That means they can drive half as far. You look at products like eggs, beef, steak, go to In-N-Out Burger or your local restaurants. They're charging way more. I just did some math. It's 50% increase at my local haunt where I go get a hamburger at. So you're going to start to impact consumption in a big way when those people can no longer afford to buy goods and services. And I think that's more of a concern to the Fed, is if all of a sudden people can't afford things, they stop buying things, that grinds the economy to a halt. So the Fed has to get inflation under wraps. My question is, I'm wondering how this all fits, and I don't know how it happened in the 80s, is when you have inflation so high. I mean, I'm looking at these restaurants. For example, one of my favorite places is the Habit Burger, right? It's a franchise out of Santa Barbara. And the Habit was like $8 and I think $8.30 or $8.50 for a combo meal. Now it's $11.50. Now, if all of a sudden we get inflation under wraps, does anybody here actually believe that the Habit's going to go, oh, we're charging $11.50 now for this combo, but you know what? Because inflation's under control, we're going to back down to $8. Do you think they're going to drop at all? I personally don't, and I don't know what happened in the 80s to even make that statement, because I'm sure that prices were rising, but did all of a sudden businesses cut back their prices because inflation was under control? I'm kind of feeling like if I'm a business owner, I'm going to keep my prices high like that because that's just more profit for me going forward. So that's the only difference there, Michael, that I see is the impact of the inflation and what does it do to prices long term. I do not believe Powell will backtrack and start going, oh, we better start cutting rates again. He can't. You have to stop inflation. It's a major enemy right now of the market, and until that's in check, they're handcuffed. They really can't do much. So it's a great question there. Let's see. Oh, and I did see Tom modeled a zero-day expiration trade today after what Brandon showed this week. Basically a rubber ducky taken in the last 90 minutes. Wendell winner. Good. Good to have a Wendell winner. I mean, or good to have a winning trade period, right? Let's not call it a Wendell winner because you already had a trading style. You were already doing zero-day expirations. You just modified it a little bit. Sweet. You know, as they say, everything works until it doesn't. So obviously be cautious with that. Let's see. One other piece here, and then I'll get to your question, Pepe. Les, who is with us today. Good to have you, Les, from Cape Canaveral. He says, I've noticed that the RTY, which is the Russell Futures, and the RUT, which is the index, during regular trading hours, look at you throwing out the R acronyms today, bud. Love it. Don't look exact. With this one, does the futures lead the cash index or does the cash index lead the futures? I thought that during regular trading hours, cash index leads. I thought that on the 15-minute candles during regular trading hours would look exact. A bewildered view. So the futures lead. It's in the name, right? The futures are the future. So right now, you're trading future contracts for the upcoming months, depending on which commodity or index you're looking at. So they're expecting prices to be at a certain level in the future. So when you look at something like RTY, you're looking at the futures product, which is anticipating what price may be in, at the next futures contract expiration. They're never going to be exactly lined up except at the moment that contract expires. So if you look at the RUT on the third week of December and you look at the December contract, they'll line up exactly at the expiration date. But before then, your December contract of the Russell is just anticipating what the prices may be. And right now, the futures contracts are pointing lower for the future. Therefore, your your RTY futures are going to have a lower price than the RUT. There you go. Futures are the leaders. It's in the name, futures. All right. Now, back to the question here from Pepe. Let's go back to our S&P 500 here. Go to the ES. He says, can you look at the ES 39.84? I've got all kinds of levels drawn in here. Let me clean some of this stuff up. Let's go back to a daily. And I will move this red line down to the exact number that you mentioned there. We'll put that coordinates, and we will type in, 39.84. Okay, so there's 39.84. It's this red line right here. I'll get rid of some of these other ones just for fun. So that red line, and you say, what about it? You say, I see a nice rally-based rally on the daily time frame. Your thoughts? Well, for me, I see two things. And so what he's referencing here, for those who might not know what we're talking about, is you have a rally from this low on March 25th up to a high on the 26th, right? Just a 2-day rally, and then it based. So you've got a rally, you have a base, and then all of a sudden it broke out. I look at it two things. Number one is you have a rally-based rally. Number two is you had a breakout trade period, right? Why did it stop here? Why did it consolidate for these 3 days right at this level? Because it was a supply zone that goes back, the week or two before on the 17th of March. So to me, this is the reason why, but it just adds a little bit of strength. When I see it break out, first I'm focusing on the breakout trade itself, but then you also have the base rally to confirm that breakout. So awesome. I like it. So, what are my thoughts on it? It's what I'm looking for. If I'm trading and I see this price action, I'll let you guys walk me through it. Unfortunately, we have a 30-second delay, which is just what YouTube does. But if you look at this price chart right here, if I was to say I'm going to trade this one going forward, it's pretty easy what to do, right? I'm looking to buy pullbacks at this point. So if it sells off, I'm looking to buy some pullbacks, and my target's going to be that 39.84 mark. Well, we'll click forward one click at a time. Oh, dab nabbit. Didn't mean for it to do that. Okay, so I'm going to go back to that one, and I'll go one at a time. Once you broke out, there's your long entry. You've got a breakout trade. And, you heard Chuck the other day talk about how before it breaks out, he likes to see some basing for a few candles. Well, that's what you had right here. And was that supply. Perfect. In this picture, I'm looking to either buy pullbacks or trade the breakout. And in this case, you had the breakout. So awesome. I mean, this is a great level. Now, the key here, I think, going forward for Pepe and others that are looking at it is, does this one come into play? Has it been touched yet? In my opinion, no. This is a fresh zone. I'll zoom further out here, but you can see it has not come back down to those levels. So it now is going to be a magnet to price to me. I think 39.84 is absolutely in play. Right? That may be your next stop. They may hit there next week. I mean, hell, we went from 4,300 to 4,050, 350 points in a week. We could find ourselves way below those levels, but right now you have to start to incrementally put what are your targets. All right, that's going to be target number 1 would be there. Probably target number 2 is going to be lower, probably about 100 points lower at 38.80. And then you have to start looking at some of these long tails down here that go all the way back into March of 2021. So if this breakdown does continue and we still get some downside movement, yeah, those are your levels and stair step it down there. Love it. What's Tom say? I'm building a set of trades that work up, down, sideways, FOMC, FOMO, Brennan's late rubber ducky could work a lot. Awesome. And make your own, I think you guys have heard me say this before. There's so many different strategies out there, and I guess adopting one person's style, I think is kind of a fool's errand. You got to find out what works best for you and make sure that those things, fit you and your style. And I guess the empirical data is it working, right? Are you making money with those strategies? And if you are, then cheers to you. Happy Friday. Hope you're going to continue to do well. Let's see. So Les, you asked me a question, and I got to dance around this one kind of carefully here. You asked about he who shall not be named, who is the POS trader from Chicago, who as you guys know, I think is the ultimate scumbag of scumbags, and how historically when he was doing XLTs, he would never really show you where he drew his levels, right? He would never show you exactly where he drew his levels, which to me is just a sign of bad character. People are paying you to see that stuff, and you're not going to show them. Yeah, shame on you. Anyway, my thinking is I don't even think he really knew what his levels were. And he's like, I'll just put a level here, and if it hits, then I'll boast about it. All right, if I get it, I'll boast about it. Now, if you go back in there now and look at somebody like Todd Davis or Larry Jacobson, there is an exact methodology. And it's like, here's how I got it. Here's the level. Can you guys all replicate this? To me, that's way better instructor and way better trader who's going to give you that information and share it with you, as opposed to somebody who just kind of puts levels out there and says, well, if it hits, I'll bring it up tomorrow and say, hey, look how great we did. If it misses, I'll just delete that line from the chart and pretend nobody took it, right? But if you're going to draw lines, there should be justification as to why you drew those. Why did you put it right there? And, Les, as you pointed out, you said you'd see these levels on a daily time frame, right? And then you break it down to an hourly, a 4 hour, a 15, a 5, a 1 minute. You're like, what the hell? It doesn't hit on anything. Yeah, because I think it's total BS. He's out there. You can follow him on social media. He's putting out stupid charts all the time, calling levels. And, of course, they're after the fact. We'll say, see, look at this level it hit. Call BS on that one. So you are correct, Les. A lot of people called him out, not only students but instructors as well, saying, where are you making this stuff up from? If you can't dazzle them with brilliance, you baffle them with bullshit. It was a great quote that one of my mentors told me years ago. It says, if you can't dazzle them with brilliance, you baffle them with bullshit. And I think that the latter, the end there is, it's a bunch of BS. Todd Davis is super thorough with his explanation of, right? Exactly, Joe. I honestly, I think if you take out, this is blunt, if you take out the FTC situation, which in my opinion was fabricated by a specific individual, two individuals and specifically who were trying to take down OTA, did that on purpose, right? That's my opinion. If you ultimately see what happened at OTA, which is certain people left, so he who shall not be named, garbage scumbag trader, disappeared and left OTA. It was probably the best thing that could ever have happened to Online Trading Academy, because what it did is it put real good instructors and very good traders in a position where they can actually share and convey the knowledge to you. I watch Todd all the time. I watch him all the time because he is so thorough and he cares that you understand the principles being taught. It's no longer, hey, I'm just going to throw up some levels out there and hope that you guys buy them, hope that you believe them, and after the fact, I'll claim how great I am. It's none of that, right? There's a sense of humbleness with Todd and Larry and Jordan. And there's a lot of great instructors. Les says all the instructors today are really great. I agree. I think what's happened is it's allowed us to get out of, at a certain point, there was over 125 instructors. And while I'm friends with a lot of them, I got to say a lot of them were not the nicest people. They weren't the best teachers, right? And some of them I look and go, well, were you really even that great of a trader? That's a whole different discussion. But I think what happened in this whole thing is it allowed OTA to kind of whittle things down and say, let's get down to a core of really good top-notch instrucors. Now, of course, some people gone off and done their own things. That's great. But do you get the support? Do you get the community? Do you get all the resources that you do at OTA, at other places? I don't believe you do, which is why I'm still with OTA. And that's just a matter of my personal preference. I know some people don't like OTA. That's your opinion. That's totally fine as well. But do your research. Oh, thank you, Les and NJ. Man, you guys are awesome today. Cheers to the whiskey fund. I got to go find a nice new bottle of whiskey for that. Dom Jenkins is great as well. Yeah, I've actually been wanting to get him on the program. There's a couple I really want to get on the show. Jordan Matthews is one I want to have on. With remote learning, you can have fewer teachers. True, you're right, believable. But see, there's one thing that I love the physical teaching. Like, for example, I'm going to be giving a presentation in Las Vegas on Wednesday. I'm having anxiety because I'm so excited to get in front of a live room of people. When I'm doing a live group presentation, whether I'm teaching core strategy or futures or something like that, there's a connection, there's an energy, there's a passion, there's an emotion in teaching to those. I love it. I absolutely love that. So when I'm going to Vegas, I don't think it's going to be the most epic presentation I've ever given in my life, but it's just getting back in front of people. And I really think that at some point, I'm hoping that OTA, that we get it back to local centers. Because I know a lot of you are all over the world, and it'd be great if we could get back to physical classrooms so you can come in and see these instructors in person. To me, that's really where the tire meets the road. as an instructor, it's very hard. Like for right now, this is a good example. You guys show up almost every day, and thank you so much for showing up. You have other things you could be doing, so to waste an hour of your day almost every single day, as most of you have been doing, I appreciate that. Hopefully you're getting some value for it. But also, I can't see whether you guys are paying attention, right? I mean, Tom over there could be watching, reruns of Oprah Winfrey or something. I don't know what you're doing. Most of the time, you guys are really engaged, but when you physically teach, that to me is just epic. I love the physical teaching of it, so I'm looking forward to it. I hope we get back to physical classroom stuff. Even though it's great to do distance learning and have this type of platform, nothing to me beats face-to-face. Let's see. What else we got? Love the instructors I had in the community field. Yeah. And you know what, Indigo? I'm sure that there's some instructors you went, he was okay. Maybe not my favorite, but it was good. I'll tell you, all the years I've done this, I've had a few instructors that I didn't like. There were a few instructors like, I just don't like your teaching style. Wouldn't work for me. But that's part of it. Live class environment, remote. Yep. It's a necessary evil, totally. Hey, good to see you, Don. The Don Francho joined us. Returns, reruns of Corey Lane. Good ones, huh? You like that Corey Lane one, huh? How can I participate in the whiskey? The whiskey fun? Just grab a glass of whiskey, Mimi. Grab a glass of whiskey and go for it. You don't have to. I don't want to support anybody's drinking habit, but, a glass every now and again doesn't hurt. Awesome. Well, good. Glad you feel that way, Echo. Let's go and learn some more. Apparently, we have Monday through Wednesday next week off. No, I'll do a show on Monday. I'll do a show Monday. Why not? I mean, unless you don't want me to, then I'll just take the whole... No. I'll do Monday. I'll do a Monday show, and then Tuesday and Wednesday I can't because I'll be in Vegas getting ready. And I think I don't know if I can do it. I'm pretty sure I cannot, but it might be kind of fun. It might be kind of fun to set up my phone and do a live stream of my presentation, but I'm pretty sure they would not allow me to do that. By the way, there's a fake Twitter out there right now. There's a fake Instagram Merlin. So if it's not TraderMerlin, it's got to be exactly TraderMerlin and nothing else. Delete it, block it, ignore it, right? It's the same thing with Don Fran. You get people copying your account as well. If you have any following, they're always out there trying to sell goods and services. And of course, you guys all know that I will never, ever come to you directly and say, hey, let me manage your money. Let me manage your trades for you. I will never do that. I have zero interest whatsoever. I'd rather give you information that empowers you to make your own trades and, share, etc. So, Don, I get probably one every couple of months. Someone's hacking me, not hacking, but scamming with a fake Twitter name. So the one you had was Trader with 2 R's, Merlin. They just doubled that one. One instructor would say, I am competing for students continuously, partially. Totally. I have an options activity, don't like it. I saw a mastermind class and they teach more. Is it expensive? I'm surprised you don't like the options XLT. If there's specific things you don't like about options XLT, let us know, or let OTA know. I'm not in customer support, but let them know and maybe we can fix it somehow. I mean, obviously we want it to be a good learning experience. As far as mastermind, you'd have to ask the other individuals here. I'm sure that there are some people that like the mastermind. It is expensive. From my understanding, it's pretty expensive. All right, let me really quickly go through some more of these questions here. Let's go to, this is from David. So yesterday we had Bill Addis on the program, which was a very enlightening show. I know, Big Ab, you are probably already in those I-bonds. I had no idea that the rate was that great on I-bonds. I knew it was somewhat high, but I was thinking like 3, 4, maybe 5%. 9.6% is incredible. So I will probably buy some here very, very soon. And, hey, HB. Isia? That's an interesting. Oh, wow, Mimi. Holy shnikes. Thank you, Mimi. That's definitely going to help the Whiskey Fund. Appreciate that very much. Thank you so much for your contributions, and keep your questions coming, Mimi. With this question here, David said, I have to wonder if they are applicable to Canadians. So I did a little bit of research, and no. If you are Canadian, you can't do it, which is unfortunate. But I think that there's probably something in Canada that's relatively similar. Unfortunately, I don't know. These are the rules for I-bonds. So U.S. citizens, whether you live in the U.S. or abroad, or a U.S. Resident, or a civilian employee of the United States, no matter where you live. Those are the 3 criteria that you have to be able to buy I-bonds. So it is a little bit restrictive just to U.S., but there you go. I wanted to make sure we could answer that question for you, David. So unfortunately, might not get that 9.6, but I'm sure you have inflation in Canada as well, and hopefully it will be tied to that. And let me know if you see something about I-bonds in Canada. And KF, thank you, KF, appreciate that. KF asked a comment the other day. He says, why do you use the continuous contract like this ES1 exclamation point? It's 10 minutes delayed. Because I'm not using this as a trade. This is not my trading platform. This is specifically just to draw and do analysis on. And the reason I like to use this one over other platforms is I can access everything from here. I can have I can have my cryptos, I can have indexes, I can have international markets, I can do it all here. And yeah, it's delayed, but I'm not day trading from this. If I'm going to be trading futures, I'm using a specific futures platform. If I'm using equities, I've got different equity platforms. So this is just mainly used because I can access so many different markets all in one platform without paying for all these data fees. That's why I do it. There you go. Yep, Mimi, you got it. That's the fake one. TraderMerlin with 2 R's. Damn scammers. All right. And let me know if other questions you guys got as we wrap up here. Is Derek Zellick still with OT? You know what? I don't know. He actually is one of my personal favorites. I love Derek. Such a nice guy. It's funny because if anybody's ever had Derek Zellick as an instructor, years ago, I actually did the training of the instructors. So you have to be able to, entertain students, also engage with students, and be able to carry on a full classroom of 30 or however many students. It's a skill set. So I helped the training for that for quite a while. And Derek was one that I actually got to train. And it was funny because all the other people who were on the training team said, don't hire Derek. His accent is too much. And I was like, are you kidding me? He's one of the most passionate, informative, caring, dedicated traders and instructors I've ever met. He is awesome on the front lines as far as an educator, but he has a slight speech. He's from Eastern Europe, so he's got a little bit of an accent. Who cares? Would anybody here have a problem with somebody who is a great trader, who is extremely attentive to your needs and wants? He's going to do everything, even after hours, to make sure that you get this information, but he's got a slight accent. Would that bother anybody out there? So we ended up bringing him on, and it was awesome. He's just a great instructor, but I'm not sure. I reached out to him a few months back to get him on the show. I'll try to do that as well, get him back on, because he said he would, but he was traveling. Merlin, when are you bringing Stephen Van Meter on the program? Peppa, you could ask Stephen Van Meter. He shot me down. He said he did not want to come on the program, so I was like, okay. He said he's too busy, which I get. He's got a ton of things going on. Plus, I mentioned this yesterday. If you look at the grand scheme of things, most people who are in this space that are doing these shows, they're not going to bring on or not going to waste their time going on someone's channel if it's not going to help them out, right? It's almost self-interested. So, Stephen Van Meter's got, I don't know, probably a couple 100,000 followers. So I've got, 5, 6, something less than that. I don't think that, I think probably he's like, not worth my time to go on there. But it's okay. It's fine. I have Bill Addis, who I think is actually the best bond person in the world, and he comes on here all the time. Awesome. Good. Get to it. Yeah. I will get him on the program. I'm still using TradeStation, the futures trading, and hate it. What platforms are you using? Contact Trade Pro Futures. I've mentioned this one before. So I used to work on, I traded on the floor out in Irvine, California, which is awesome. Let me go Trade Pro Futures. I'll give him a little bit of a plug because he's awesome. So his name is Trey Lazera. He owns this company. It's Trade Pro Futures. You'll notice that what's great about them, and again, I don't want to sound like a pitch here, but if you go to their platforms, they have a whole bunch of different platforms. Let's see, where is it at? And you can pick all kinds of different connections. Let's see, Bill Exchange software download. Let me see what you got here. You have Sierra Charts, Overcharts, Trade Pro, Trinity, and then there's also MetaTrader was in here as well. I'm not sure whether they just stopped using that one, but you have all these different platforms you can use. But the key here for me is the margins. So if you look at the margin rates, they are way cheaper here than anywhere else. He's got some of the best margin rates in town, and he's got all the different currencies, etc. So I would go to Trade Pro Futures. That's where I trade through. His name is Trey Lazera. They're awesome. Again, good support. Ryan Watkins, yeah, he was on a while back, but I have not had him on. So I'll make a note right here. I'll get Ryan. I'll reach out to him this weekend. Derek. And who else do we say? Obviously, Stephen Van Meter. Yeah, he's a little bit... Indigo, it's not that I dislike him. He's a little cocky. But you know what? Good. Have that confidence with you. I still think he puts out some good information. Last time he was on the program, I didn't agree with everything he said. I was like, man, I don't agree with you there, but that's what's awesome for trading. You know, you don't have to agree with everybody, and if you disagree with somebody, don't be an ass about it. Just be like, no, I disagree with you, and here's why. Don't start calling people out. Who's the mystery trader from Chicago? I wouldn't even call. See, you say mystery trader. I would erase the trader. I would say the mystery entity. But I refuse to mention his name on this program because he's just such a scumbag. He is a scumbag. All right, let me go. No problem. It's always a delay. Dig. It's always a delay because of YouTube. It's like a 30-second delay. All right. Believable direction. Is Power Trading Radio ever coming back? No. Power Trading Radio will not be coming back, predominantly because I'm the host of it, and would you guys rather me be here where I can be more myself and not under the constraints of corporate saying you can't say that, can't do that, don't badmouth this person, or would you rather have that or free form where I can do pretty much carte blanche and do whatever I want? To me, this is a way better show. Unfortunately, I had the marketing arm of Online Trading Academy, so I could, with Power Trading Radio, I had a much bigger reach, but this is better. This is a way better format. Let's see. Let me go through what's happening on Monday. There's really not much going on with regards to earnings, but there is economic calendar stuff just so you guys can see this one. For the U.S., it's pretty quiet. We have wholesale inventories coming out on Monday. They're expecting that to stay pretty much the same. For Canada, you have building permits. And yeah, that's pretty much it. Not really a lot going on here. Nobody really cares about the Japanese 10-year bond auction. Not that big of a deal. So it'll be a quiet day for Monday's trading on the 9th, and there's really nothing there with the earnings calendar as well for Monday. Yep, Merlin uncensored. Well, at least PG, right? I'm PG-13, I think, on this show. I'm certainly not going to take it to an R-rated show. I know that people don't like when I get too potty mouth, but when I did Power Trading Radio, I'm not under the control. I could still do what I wanted, but I understood that I have to mind my P's and Q's because it was an Online Trading Academy thing, and of course, I don't want to do anything to damage their reputation. Here, I'm just going to damage my own reputation. I'm not worried about it. I'm okay with that. Let's see. What else do you guys want to know? We got a couple more minutes here before I got to wrap up and go enjoy some sunshine. Oh, Rob, this is a great, glorious day out here. Thank you, Rob. Appreciate that. Thank you so much. I do too. I like when it's more of just kind of it's almost feel like we're sitting around a bar right now having a conversation. So, what's something that you guys find interesting? Let's what's something that just piqued your interest this week, or something in the markets that you go, man, that's perplexing. I want to know about that. Give me something to wrap up with here for today. What do you guys think? Certainly we could go in a lot of different directions here because obviously the financial markets are infinite with regards to scope and reach. One of the things, let's see, that's been interesting to me, I guess probably the most important thing that I've been seeing is just what's going to go on with the Fed unwinding the balance sheet. We'll see in the next month. I want to see, I'll be watching the New York Fed, and I'll let you guys know when that comes out, is when they actually start to unwind that balance sheet. Because what you'll get is you'll get a calendar that says, here's the dates they're going to unwind and sell these things. And I believe you'll start to see market reactions on those specific days when they unload their, $47.5 billion a month that they're going to be unwinding for 3 months. And then all of a sudden jumps to $95 billion. Big Eb says, is the upcoming lower inflation forecast thinking based on that oil drop last month? Chris, thank you, Chris. I got Canadians out here. Thank you very much, Chris. Appreciate that. Yeah, definitely. You guys are all awesome today. I'm actually, it's really hot up here, but I'm also getting flushed with happiness, I guess. So let's tackle that one for Big Ab. If we look at the price charts here of crude oil, certainly you could make the argument that it's sold off over the past month, but we're still not down that much, right? If you look at the forecast, they're expecting it to go from 1.2 to 0.2. That just don't see that happening. Whereas if you look here, it's dropped. And if we go from month over month, where we at, we're down roughly 15% on crude oil. Okay, fine. Let's look at the forecast here. Let's go to next week. So CPI is going to be on Wednesday. So let's check out Wednesday's calendar just so you guys can see the numbers. Here's what I'm talking about. This is an insane drop. You can see right here in blue, 1.2 is the previous, and they're expecting it to be 0.2. But when you take out food and energy, it's actually increasing from 0.3 to 0.4, right? Core is when you take out food and energy. So I think that is certainly factoring in the drop in crude oil, but Has oil really dropped that much? Like really this much to warrant? I mean, just to put it into perspective, here's the chart of CPI going back into 2014. My cursor, where it's at right now, is where they expect it to fall to. Does that seem just a little bit exaggerated? I personally think that's way too much of a contraction. I don't see that happening, but, I'm not an economist. I'm not calculating the CPI data, and I'm not on the front lines. But, maybe you forecast it drops to 0.7, or 0.6, but to 0.2, I don't see that happening. I just don't. So that's my take on that one, Big Eb. I think certainly it is factoring in the crude oil drop, but, I don't see that number coming out of 0.2%. And when you look at the next day, if you go here and look at producer price index, which is going to happen on Thursday at 5:30 Pacific time, same thing, 1.4, they're expecting to drop to 0.5. But what's interesting is if you look at the core numbers, they're actually expecting their core number to drop as well. Now, you guys, I'm hoping you all see the difference there. Remember, CPI is the basket of goods and services that you and I are buying. PPI is the people who are making it, what it costs them. So if you take out food and energy, it looks like prices are dropping significantly for manufacturers who are producing these goods and services, but the costs that we're paying are going to be going up. So you've got PPI dropping, CPI rising. That means better profit margins for corporations going forward, but to me, that's not sustainable. I don't see that lasting very long. What else do I got? We are 7 weeks away from officially being in a recession. It needs a better name than the Great Recession. Suggestions. It's almost like Fed session, because to me this was created by the Federal Reserve. It's 100% Federal Reserve created. Central banks. So I don't know if I would make it some combination of that. Some Fed session, Fed deflation or something like that. Fed collapse. All right, let's go to the chart here so I can look at mRNA for NJ. The old vaccines. Well, that looks like it's just dead, doesn't it? Goodness, man, it's funny. We have these, God, it's been so long since I looked at Moderna. We had these red lines drawn to show kind of the contraction of price. And normally when you have these kind of contractions, you're waiting for a break one way or the other. If you traded that to the downside, you have a great trade going on. If you look at this one, NJ, I hate to say it, I'm more bearish, right? How could you be bullish on this thing? You're probably thinking, not you personally, but I mean in general, is you're probably thinking, oh, well, it's basing here right around 120. It's going to bounce and move up. And it very well could. But let's just take this line and tweak it a little bit. It's still trending down, whether you use that long-term trend from August of 2021, or we just do it from right here. It's looking weak, and you have this kind of baseline that's it's smacking against. So it doesn't look good. I'm not really looking at Moderna as a buy here at all. Could it be? Could it be maybe near winter time, because apparently COVID thrives in winter. So maybe winter it starts to pick up again, and all of a sudden we got to get more boosters and more vaccines, that type of stuff. So we'll have to wait and see. But it doesn't look good to me. Why does the media feel the need to forecast a market bottom when selling momentum seems to be picking up? Well, look, everybody on TV needs to look smart, John. You look at Jim Cramer, he's got to go out there and pretend like he's the smartest guy in the shed. And here's Bob Pisani and Maria Bartiromo. They've all got to have an opinion on everything. And I guess I'm no different, right? My perspective is I'm trying to come up with a reason why everything is doing what it's doing. I'm trying to figure out how this, quote unquote, the watch is performing. So, media feel the need to forecast a market bottom because part of it is they want everyone to feel good about the markets. If you go out on a media channel and you say, man, right now, don't buy anything. You should start shorting this market and, just get short because we're going to go down 50%. I'm just throwing it out there. You will not be welcome back on TV. I know this personally because back in 2008, I was kicked off of CNBC for saying if we break 1260 on the S&P 500, break out the bulldozers, we're going down in a big way. Quote, unquote, you can actually go on my, it's on YouTube somewhere, just type in Merlin Rothfeld CNBC, and you'll see the quote. And, in hindsight, we did exactly that. And I'm not a person who likes to brag, but it was one of those ones where you're like, damn, I freaking nailed that. So let's go back to 2008, and I'll show you exactly when that happened. Come on. It'll take me a while to get back there. But if here's your chart, let's take this line off and take this box off the screen. And I will put a horizontal line at 1260 on the S&P 500. Right there. You guys see what happened? It hit once. It hit twice. Broke it one time. Did a bear trap. And then absolutely fell apart. Nobody wants them to be on TV going, this market's going to hell in a handbasket. I was kicked off of CNBC for that. I thought it was so special because I made it on CNBC. And I was on right back here somewhere. I was on before it actually hit 1260. And in case you're wondering why 1260, if you put your cursor over here and see what the all-time high at that moment in time was, it was 1575. Right? So let me bust out a calculator for you. And I'll bring that over here. And if you go 1575 times 80, or 0.80, 1260 exactly. So basically what I was saying is 20% off of the all-time high at that moment. And once you go below that, you have a bear market that all media will start saying bear market. On this drop right here on January 23rd, I believe that the Fed actually cut rates 75 basis points before the market opened. Here they lowered another 50 basis points trying to save the market from going below 1260 on the S&P, and all of a sudden we broke and the rest is history. That was an amazing trade. Fortunately, I was long QID and SDS at this time, so I caught a lot of this move with some leveraged instruments, but I did not ride it all the way down to 666. But long-winded answer, that's part of the reason, John, is they want to make people feel okay with the markets. I mean, why do you think Jerome Powell said, we're not even thinking about 75 basis points right now? You know it's come up. There's no way that conversation has not crossed the table at the FOMC meetings. When all those central bankers are sitting around discussing, hey, should we raise 25, 50? You know, someone's like, what about 75? Are we going to go there? But he's like, no, we're not even discussing that. Bullshit. You're absolutely discussing it, but Jerome Powell needs to calm people down, right? You don't stand there. Imagine if Jerome Powell, let's just take a step back here and understand how you and I are being manipulated. If Jerome Powell did what he did, which is, nope, 75 basis points is off the table, everything's okay, we're on for the next two meetings at 50 basis points probably, but you know that's fine. That made everybody feel calm and the market shot up. Internally, he's probably really thinking something like, oh, shoot, man, we're in deep shit. If he came out to that podium and said, guys, we're in deep shit, we don't know what to do right now. This inflation is going to be a serious issue. We may have to do some really drastic stuff going forward. The market would have lost it. Market would have dropped 1,000 points in the day, right? On the Dow, not the S&P. But the market would have lost a lot of value very, very, very quickly. He can't. He's got to maintain peace and calm and order. But, you know, behind those closed doors, I think there's a little bit of boots shaking going on, if you will, with regards to fear and panic out there. Let's see, Tom. Trump, COVID, Afghanistan, chip shortage, supply chain, gas prices, Putin, everybody else's fault, recession. It's a little long-winded. Maybe we can come up with an acronym for that one, but yeah, it's something like that. Let's point the finger at everybody else. Oh, hey, thanks, Mimi. Thank you very much. All right, well, let's wrap it up here so I can go finish this glass of whiskey, pour myself another, and then answer some work emails and go to the beach and enjoy my day out there. So again, thank you guys so much for the show today. Hope you enjoyed it. If you have comments, questions, feedback, put them down below the video on YouTube or email me. Email's on the screen. It's TraderMerlin@gmail.com. That said, I wish you all a fantastic weekend. Go do something fun and exciting. Cheers to everybody. I will see you on Monday's show before I take off for Las Vegas. I'll see you then. Take care.